Why do you think the shares have reacted so strongly to this policy now unfolding in India?
Sure. I think it's a pretty surprise policy because, the industry was not really aware of it, and it came out last week and was executed extremely fast. Nazara is a very diversified gaming platform with 80% of its revenues coming from international markets, while its home market, which is India, is a very interesting growing market for us. We are diversified into real money gaming, but also into esports and casual gaming, with 100% of our revenues actually coming out of not including real money gaming. The only thing with real money gaming is we have an investment in PokerBaazi, which is India's largest online poker platform. And it's about $100 million investment, which is at risk, and which is why you see the stock reacting negatively to this news flow.
So has the market misunderstood your business, or are investors right to be worried?
Yes, I think, of course, there is a risk to the $100 million investment that we have in PokerBaazi, and the company will adapt itself. The PokerBaazi business will adapt itself to the new regulations. But our overall revenues do not include any real money gaming revenue, so our revenues or our profitability would not get impacted at all. That's a clarification we also put out to the stock market. But right now, there's generally a lot of surprise and negativity towards gaming in general in India.
As I understand it, that exposure to PokerBaazi is at about a 46% stake in both equity and convertible. So are you preparing now for a full write-down?
I think we are going to evaluate over the next couple of weeks what kind of pivot the business can take. And, of course, there probably will be some level of write-down. But whether that's full or that's 70%, we will have a discussion with our auditors and then take a final call.
So you're considering your options. If you do write off that investment, how would it flow through to P&L? Let's say you went ahead with a 100% write-down, take it off the books. What is that going to mean?
I think our revenue and EBITDA will not get impacted, but below EBITDA, we will take an impairment. So the PAT will be negative to that extent.
And what would be your preferred course of action at this point? If you had to make a decision right now, would a full write-down make sense?
Nazara generally follows a conservative policy of accounting. So we will do a conservative accounting to the extent our auditors advise. I think that's really the plan. But I'd just like to take a step to, explain a bit about the Indian gaming industry since we're talking. It's a $4 billion a year industry. About 80% of it comes from real money gaming. But it also has 500 million gamers, and everyone's playing on their mobile phone. And while the short-term impact on real money gaming industry is going to be, felt strongly by the industry in general, I think India is probably going to be the largest growing market in gaming over the next 5-7 years. And I think we are something very excited about as India's only listed gaming company. I think there's a lot of opportunity we have. Also, the regulations that have come out, while they were negative for the real money gaming side, they're extremely positive for esports and casual gaming, both areas where Nazara operates and is actually a market leader in the esports space. So I think it's kind of a bittersweet regulation for us. We're still very excited about the gaming industry in India.